Hey everybody, Cece Summerfield here with another live with a professional, and I want to introduce Bill Frioli. He's with World Financial Group. So Bill, thanks for coming over today. Just want to talk to you about some life insurance stuff. So why don't you tell us, I just basically gave it away what you do, life insurance, but you work for a financial services company called World Financial Group. What all does that cover?
Well, Cece, thank you, first of all, for inviting me here today. I really appreciate you taking the time and giving me the opportunity to bring some value to the listeners today.
Yeah.
So what we do is, as I mentioned to you earlier, it's more about educating than it is about selling.
Okay.
We want to make sure that the people that we talk to understand how we work and why do we work that way.
Okay.
So what we do is we educate people on how money grows and how money is taxed.
Okay.
Once we understand that philosophy of how money grows and how money is taxed, then we can move forward in filling up holes that we have within our financial situation.
Okay, and that includes some life insurance, because I know there's a lot of people out there who think life insurance is like you're paying for a term policy, what they call a term policy,
Yes.
and you're paying to have some type of death benefit at the end. There's no, I mean, honestly, I didn't know until, gosh, a couple years ago that there was an opportunity to save money in a life insurance policy. So I feel like that's what you're talking about, right?
Yes.
Okay.
So when it comes to life insurance policies, there's several kinds. There's term, as you mentioned, which is anywhere from 10, 15, 20, up to 30 years, but there's no cash value built up.
Right.
But they're good in the sense that their premiums are very low and you have coverage, death benefit. Now people ask me, well, Bill, you talk to me about old insurance and new insurance. What do you mean? Well, old insurance has death benefits.
Okay.
New insurance, the new insurance term and policies, they have death benefits and living benefits. So what do you mean, Bill? It means that if you're hospitalized for chronic terminal illness, and now you have all these medical bills, and you have this old policy that only has death benefit, it's not going to pay for your medical bills. But with that new policy, that new term policy, now you have living benefits. That will go a long way toward paying off your medical bills. If you don't have that, what normally happens? You either go bankrupt or you set up a GoFundMe account.
Yeah, I've seen that.
So what we want to do is make sure that you're covered for anything that would happen to you in the hospital or not.
I think what we wanted to talk about today is about why it's so important to have a life insurance policy when you're a homeowner. What can you tell me about that?
That's a good question, Cece. I think it's important that you have a life insurance policy to make sure that, God forbid, something were to happen to one of the breadwinners of the home passes away.
Yeah.
Now the other spouse is still there and they have children. How are they going to afford to continue to make the mortgage payments when they normally had two incomes? Now they have one.
Yeah.
So what happens, they end up going bankrupt or selling the home because they just can't afford to stay there any longer. So what we try to do is make sure that you're going to have enough coverage on your life insurance policy to cover that area. And what we call it is the dime theory of analysis. What is a dime theory of analysis?
You got me.
Dime means debt.
Okay.
D is for debt. So whatever debt you have, that's the amount that we want to put on the insurance policy. So dime, D, then I is income. So you take your income times 10. So we'll give you 10 years of income, God forbid, if that breadwinner passed away. For 10 years, you'd have income.
Wow.
M is for mortgage. If you have a mortgage, that insurance policy is going to pay for that mortgage. So the living spouse and the children have no mortgage. It's paid off. The E in dime is for education. That's to pay for the children's college education.
Oh, wow.
So it covers all those areas. Now, you may not need all those areas. If you don't own a home yet, you're not going to have M, the mortgage. If the kids are not going to college, then you won't have the E, the education. So dime theory of analysis is what we want to make sure so that we have everything covered and you don't have to worry about a thing and leave your family with a legacy,
Yeah.
not a mortgage.
Right. Not in debt. Yeah, that's super important. So, you know, that really brings to mind a story that I have personally experienced. I had a neighbor of mine years ago that had lost her husband and was really, I mean, living on one salary, and it was a teacher's salary, and she had 3 kids. And her husband wasn't that old when he died. I mean, it's pretty traumatic. They owned a home together, and so she was stuck with that mortgage you were talking about and trying to pay it on a teacher's salary, and unfortunately just couldn't keep up.
No.
And it really was a thought process to me, like, oh my gosh, you know, my husband at the time was in the same industry as this guy and self-employed, and he was the one that brought in the regular money, and I was the one. I've been up and down with my real estate business, but he was the one that really brought in the regular money. And I was like, oh my gosh, what happens if he dies? Our kids were little, so it really encouraged me to go out and just at least get a term policy.
Yes.
Because we didn't own a home at that point, but I didn't want to have to uproot my kids. And
Yes.
just watching that situation, I mean, I felt horrible, you know, that she was in that situation. But it was a good opportunity to educate myself and make sure that we were covered in case that, you know, something awful happened. Gosh forbid, you know. What kind of insurance? We talked about the dime theory of analysis.
Yes.
So it kind of brings me to, do you really analyze each situation for a homeowner, or for anybody for that matter? There's not one like set life insurance you need as a homeowner. It's pretty much all over the board, right?
Yes.
Yeah.
Yes.
So you want to sit down with somebody, really, and analyze their situation and see what's the best situation for
Exactly.
them.
Yes. So when it comes to life insurance, there's 2 types. There's term insurance, which gives you life insurance for a certain number of years, and then there's permanent insurance.
Yeah.
So permanent insurance is a little more expensive
Right.
because you're building cash value within the policy. So what I like about the permanent insurance is having something to where you can have set up your own family bank,
Yeah.
as opposed to going to the bank to get a loan for anything, to buy a car or put a down payment on a home. You have your own bank, and it's called an IUL.
Right.
What's an IUL?
I know. I think I know. It's something about universal life.
Yes, it's called an indexed
Index. That's right.
universal life insurance policy. So what does indexed universal life mean? Well, an index gives you the advantage of taking advantage of the upside of the market, but never the downside.
Right.
So what do I mean? It has a floor of 0.75%, and it has a cap of 15%. So that floor is 0.75%. The cap is 15%.
Yeah.
So anything between 0.75 and 15% is yours to keep.
Okay.
So in other words, you never lose money. When you have that cap of 15%,
Yeah.
it's based on the S&P 500. But it's not invested in the S&P 500, it mirrors it. So let's say the market, and we saw the market in 2008, went down nearly 40%.
Oh my God. It was
People lost nearly
it was
half
bad. Yeah.
of their money that they had in 401ks,
Yeah.
IRAs, TSPs, 403bs.
Right.
They had their money in.
Right.
They lost 40%. So if you had your money into an account like this, an IUL, you didn't lose anything.
Right.
Why? Because you're at 0.75. Actually made money,
You made a little money.
a little bit of money.
Yeah.
Now, what if the market goes over 15%, goes 16 or 17%? You get 15, that extra 1 or 2%, where does it go? goes right back to the insurance company.
Oh, okay. So that's how they make a little money.
They reinvest it into trillions of dollars, which allows them to guarantee you never lose principal.
Interesting. I don't know. All these numbers are crazy to me. I just like the safety net of it.
Yes,
is really
yes.
what I like about it. And I actually do have a policy. It might be IUL. It might be the whole life, something like that. But basically, because I'm self-employed, I wanted to make sure that I had some kind of backing for retirement. I mean, I can stash away all the money I want, and I do have a 401k too. I have a couple different funds, but I think it's good to diversify. Don't
Yes.
put all your money in one place. But this is definitely probably the safest thing for me, and I feel like comfort in knowing that eventually there's this money that I can take back out of the policy and have a retirement on. So I encourage anybody, even if you aren't self-employed, to look into it at the very least. And what does your company do? I know we were talking when we first met, and your company is kind of different in ways. Can you tell me why your company is different than other life insurance providers?
That's a good question, Cece. The difference that I've come across when I came with the firm is that unlike most financial advisory firms out there today, they're going to charge anywhere from 1% to 3% to manage your accounts.
Right.
And it doesn't matter if the market goes up, down, or sideways,
Right.
they're still going to get paid.
Yeah.
What I like about this company is the company has a slogan, a motto, a crusade, if you will, of no family left behind. I like that.
Yeah.
Because we don't care how much you have.
Right.
We don't care if you have 50,000 or you have $5 million. We're going to work with you. See, most financial advisors out there today, if you don't have $1 million to invest,
Sure.
the lowest I've seen is $250,000.
Right.
They won't even talk with you if you don't have at least that much.
Right.
Well, we don't feel that way. There's a lot of people that are hurting right now with this pandemic that need help.
Yeah.
And we're there to help them.
That's great. I like that too.
So I like that aspect. The other thing I love about the company is we're 100% complimentary.
Yeah.
What do I mean?
Yeah, that was the real big surprise. I was like, wait a minute, how do you
How do you get paid,
how
right?
do you get paid?
Right.
I mean, really?
Well, here's how we get paid, Cece.
Okay.
When we work with a client, we represent them as their broker. So we want to find out, what are their needs? What are their dreams? And what holes do they have in their financial plan that we can fill?
Yeah.
Once we understand what their needs and dreams are, then we want to match them up with a company or companies that best fit their needs. We work with over 77 different companies on our shelf that we work with. They're all A-grade companies. We will not work with any companies that are B or C companies. So when we work with these companies, they don't charge you. I don't charge you.
Right.
At the end of the day, Cece, what I'm going to do is I'm going to build a company or companies that I match the client up with for all the work and time I put into it, and they pay me
Got it.
directly.
Okay.
It doesn't come out of the client's pocket.
That's great.
I like that.
I do too. I think that's a great fit.
Did that answer your question?
Yeah, it did, definitely.
Okay.
And I like, just the fact that you were talking about, other financial advisors, and they have a minimum dollar amount that you have to be
Yes.
investing with them or putting with them as an advisor.
Right.
And not everybody has, the majority of the people that I know don't have that
Yeah.
going for them. And so there's got to be something for the little guys, right?
Yes. We're looking to work with the everyday American families, the middle class families
Yeah.
that don't know where to go or who to talk to.
Right.
And I would venture to say that more than 80% of most people have never sat down with a financial professional
Well, it's
before.
scary. It really is scary. Especially when you're like, well, I don't really have that much money, so what am I going to talk to a financial professional about?
Right.
And it's also make an analogy of it is like it's like getting naked in front of somebody. You're getting financially naked.
Yes.
Like showing it all. And
Showing
like,
it all.
this is it. This is what I got. And nobody.
Well, and that's
it's
why
tough.
it's so important that whoever you work with, that you feel like you can establish a relationship of that where you like that person, you
Yes.
trust that person,
Yes.
so you know that they're looking out for your best interest,
Right.
not theirs.
Yes.
And the biggest thing that's important to me when I talk to people about what it is that I do, my greatest satisfaction out of what I do is seeing people's dreams and goals come to fruition,
Oh yeah.
knowing that I was a small part of that.
Part of it. Yeah. I feel the same way when I'm helping people buy a house,
Yeah.
setting them up for not only just home ownership, but also, accumulated wealth in real estate. And it's so fun to watch that, and it's so
Yeah.
exciting to see them, and create a home out of this house that they buy. And so I totally get where you're coming from with that.
Yeah, absolutely. Gives you a peace of mind knowing that you did a good deed today, and you helped a family
Exactly.
to get where they want to be.
Yeah.
So if I can help enough people get where they want to be,
Right.
I'll get where I'm going to be.
That's right.
But I have to help them first.
Yes, totally.
It's not about me, it's about them.
Agreed.
One of the things that's important, I think, for people to understand is, as I mentioned earlier, it's all about educating. So we educate people on how money grows.
Yes.
So how does money grow? Well, typically when you get a paycheck, where do you put that money?
Bills.
In bills.
I mean, honestly.
In the bank.
Yeah, in the bank, and then you pay the bills,
And then you pay the
you hope
bills.
to have something
Right.
left, right?
So what does the bank pay you?
Nothing.
0 to 1%.
Yeah, I think I've got like 17 cents on my
Yes.
savings account or something like that.
So I'm not saying you shouldn't put money there.
Of course
you
not.
should have.
I mean, you should have a little bit in savings.
Yeah,
and-
you need some money, liquid money there
Sure.
available to
Yeah,
you. And
exactly.
we think that it's important that you have at least 3 months worth of expenses in the bank
Yeah.
as an emergency fund.
Yeah.
And if you had that, you were able to weather the storm a little better
Sure.
in this pandemic than if you didn't have it. If
Sure.
you didn't have that reserve money in the bank, then you probably maxed out all your credit cards and are further debt now than you were before.
Yeah, and that's one thing I have to say about the life insurance policies that you're talking about is it's one way you can actually have kind of that emergency fund. It's not that you want to use it for the emergency fund, but it's there if you need it.
It's
You
there.
can lend it back to yourself once you pay it into the policy, which I
Yes.
really appreciate.
Yeah, and you can take the money out of the policy for any reason at any time, and it's tax-free.
Right. Right.
And when you pull the money out of that account, when you retire at 65 or whatever age, it's 100% income tax-free.
Because, I mean, I'm going to say this, and this is one thing I learned about life insurance, with the 401k policies and stuff like that, you do get a tax benefit, a tax break for that. You do pay taxes on the income going in, but the great thing about it is that you don't pay it after it grows and comes back out. So I
Right.
do like that. I mean, there's all sorts of like financial things you can do, and again, don't put all your eggs in one basket, but it sure is nice to have a policy that you can pull money out of whenever you need it.
Absolutely, your own family bank.
Yeah, exactly, like you talked about.
So if that's the case, and on top of the 0 to 1% you're getting at the bank, there's also inflation to deal with.
Yes,
And that's
3
a-
to 4%.
And it's going to 3 to 4%.
Yes, that's so scary.
It's scary. So if that's the case, where are people putting their money?
Right.
They're
Yeah.
putting it into variable accounts. If you look up variable in a dictionary, it says
Ups
it goes
and
up
downs.
and it goes down. So you can
Yeah.
make a lot of money,
Yeah,
but you
don't
can lose a lot of money too.
We experienced that, like you said, back in 2008 and 2009. I had clients that seriously lost like at least half of their 401k, and it's
Yeah,
just,
it's so sad.
it's really sad. It takes a long time to build that up. So
So in these variable accounts, there are 401ks, 403bs, IRAs, TSPs in the military. So mutual funds, that's where people put their money. But again,
Yeah.
it goes up and it goes down. And now, let me ask you a question. Would you rather have no guarantees or guarantees on your money?
I mean, on the good portion, the majority of it, I want some guarantees.
Guarantees,
I mean,
of
I'm willing
course.
to do a little risky stuff, here and there, but it's not with a bigger portion of the money.
Right,
Sure.
so guarantees, me too.
Guarantees are great.
Twice on Sundays. Okay, so then, if that's the case, why is that, are people putting it in 401ks? Because they feel that it's one way I can put money away that my company may match.
Matches it, yeah.
And if
That's
you get a
big
match,
part of
that's
it.
like free money. But typically you do the match, and once you reach the match, then you stop putting money into it.
Because all of us have these bills, and we like to have spending money, and we like to do this, and we like to do that, and it's really hard to save on your own. I mean, I'm one of those people, you know, especially being self-employed. You're like, oh, good, I got paid. Let's go out.
Yeah, let's go
You
have some
know?
fun.
So you have to self-monitor, and that's
Yeah.
a lot harder than just watching it come out of your paycheck and have your company match it. So.
And that's a good point too, CC,
Yeah.
because I think it's important that people understand that they're saving for their retirement, but that doesn't mean you shouldn't have fun while you're young.
Sure.
Go out
gotta
and have
a little
some fun.
You gotta live a little, right?
Yeah.
So.
On variable accounts, then, well, where else can you put your money that you can get those guarantees? And that's where Index Universal Life comes into play. Now, people say, well, how come I never heard of this?
It's not very widely
Index
known.
Universal Life.
Yeah.
Well, you know, CC, it's been around since 1913.
I know that. I just know that it's not very put out there, advertised at all.
1913.
Yeah.
You say, well, how come I never heard of this?
Yeah.
Well, because no one has ever educated us about this.
Right.
So back in 1913, they came up with this, and who's been able to use this and to take advantage of it? It's the wealthy, the Rockefellers. It's the corporations.
Sure.
It's the banks.
Yeah.
But the everyday American family knows nothing about it.
Right.
And that's where we come in to educate people about this.
Awesome.
So the second area that we want to educate people on is not only how to grow your money, but how is money taxed?
Yes.
So I don't know about you, CC, but I only want to pay taxes once
Right. And I'd rather pay on the seed than
on
the
the
harvest.
seed than the harvest. That's
I
good.
already know it.
Yes, that's very good.
And that's the thing about that life insurance policy.
That's right. You know that. That's good.
I've been educating myself for the last couple of years.
Yes.
And so
Absolutely.
I do believe that I've made the right decision in creating a policy for myself. And like you said, there's different fits for everybody. And as I said, you know, you shouldn't put all your eggs in one basket. You should definitely diversify, but this is definitely something you should look into if you don't have this piece already set up.
Right.
And see if it's a good fit for you.
On the, we're talking about how your money is taxed. On that first area where you get that paycheck, you put it into the bank account, you're paying taxes on it,
Sure.
and you pay taxes on it again and again and again. Every year you're paying taxes on it, on the growth. Then the second area is the variable accounts.
Sure.
So people like the variable accounts because they say, well, I don't have to pay taxes on it up front. I'm deferring it. I'm going to pay it later. It's called
Yeah.
tax deferral.
Deferral, yeah.
So you pay taxes when you retire. Let me ask you a question, CC. Do you think do you think taxes are going to be going down, or do you think they're going up in the future?
Well, I could be super optimistic and say down, but I know that's not the truth.
It's going up.
Yeah.
Yes, I agree with you.
Yeah.
Second question. Do you have any control over how much you're going to pay in taxes? No.
Not really. It just depends on how much I make.
Right. So our favorite uncle, Uncle Sam, when we get ready to retire, they're telling us right now, plow as much money as you possibly can into that variable
Retirement,
account,
yeah.
your 401ks, IRAs, mutual funds. Plow as much as you can into that. When you retire, we're going to decide how much you have to pay in taxes. Uncle Sam's going to decide how much you pay,
Yeah.
not you.
Yeah. Yep.
So unfortunately, we're probably going to be paying more taxes in the future.
I know. But such is
So,
life, right?
so if that's the case, where else can people put their money? In that
Something
Index
more with
Universal
a
Life
guarantee,
policy, where it has guarantees.
yeah, it has guarantees and you're only paying them the money up front.
Yeah.
That's
So you
something
pay the
I
money
really
up
like
front,
about- I like
it grows tax-free,
Yeah.
pull it out, 100%
But
income tax-free,
Yes.
which is
Really
huge.
important. Really
So
important.
that's all I have for today.
Well, thank you so much. And you know, we all know that life changes and some things are very unexpected, so it's good to be covered for sure. And I think Bill's done a great job of explaining that. If you have further questions or want Bill's information, I'll put it in the comments below after we finish this video up. Thanks everybody. Have a great Friday and an awesome weekend. Enjoy this beautiful sunshine we have at the beach.
Bye, guys.